Hi everyone, this is Vignesh from Investing Gurukul. Today we are going to talk about a specific theme which is about tech IPOs in India. We have been seeing a lot of companies like Zomato, Paytm, etc. getting listed in India. Uh, the problem is, so this is a specific theme where all these companies are not profitable, loss making, and are coming out with very high valuations. So what we are going to see in this video is this actually a big opportunity to make truckloads of money, or is this a bubble that is waiting to burst? So we'll have a deep dive on this in a series of videos. So let's talk about this topic. So the topic is tech investing in India. Is this a bubble or an opportunity? So before heading into Indian tech stocks, we have to look at what is there in the US, because we have always been following US. So there are a lot of companies listed in US. There is a separate index called Nasdaq, which is very popular. And there are so many millionaires who have been created through investing in tech stocks like a Tesla, like a Google, Amazon, WhatsApp, Facebook, etc. So let's look at US. So if you look at US, right? So in 2008, top 10 companies in terms of market cap, most of them are into manufacturing, FMCG, etc. Now let's look at 2018. So from 2008 to 2018, in 10 years, so many things have changed. So Apple is in the top 10, Alphabet, which is Google, Microsoft, Amazon, Meta. All of these companies have entered the top 10 and displaced some of the legacy companies in the manufacturing space that have been part of the US top 10 companies by market cap. So if you look at 2021 as well, you see more companies. Tesla is here, NVIDIA is here. Only Buffett's Berkshire Hathaway is in the top 10. If you remove that, Visa is also a tech company eventually, JP Morgan. If you remove these companies, then you have seven companies out of the top 10, which is a tech company. So let's look at the Indian context. So in India in 2021, the top 10 companies by market cap, if you look at it, we have Reliance, TCS, HDFC Bank, Infosys, HUL, HDFC, ICICI. So all these companies have been there. So the thing is, many of the new tech companies that are coming out with an IPO are having huge potential to displace these companies and enter into the top 10. Even Reliance is moving to become a tech company. They are moving from petroleum to data. So recently, last week, what happened was Zomato and Geo Financial Services are added to Nifty 50. So this is what is happening. Slowly, some of these new age companies will be added to Nifty 50. And later, what will happen is they'll displace the top 10 companies in terms of market cap. That is the kind of potential that is available with these tech companies. So let's look forward. And so startups like Zomato can easily displace a 10th rank company like Wipro and enter the top 10. So they got listed, they have huge market cap, they are now a part of Nifty 50, but they continue to remain a loss making company. They are putting in a lot of efforts to become profitable. So it is very, very important to have some allocation towards these tech companies. You will have a lot of stocks in your portfolio. If you're building a portfolio now, you will have to look at different themes. Themes like pharma theme, a theme like FMCG theme, or consumption story. Similarly, this is a theme called tech investing, where you can have some allocation of your portfolio towards these tech stocks. But before that, you have to understand how these tech companies work, how do they operate. They are not having any profits. So should you even invest in a loss-making company? So these are some of the questions we have to answer. So as we go through this video and in the series, we'll have detailed answers for all these questions. So if you look at US and Chinese stock markets, technology has the richest valuation. Most of the richest valued companies like Tesla, NVIDIA, Salesforce, Meta, Google, all of them are tech companies. So we cannot ignore tech companies when you're building a portfolio in India. So let's now look at what are the different ways for us to participate in these growth stories. So the first option is you can directly invest in potential startups as angel investors. So if you are a HNI with more than $1 million of net worth, you can directly approach some of these startups and invest at the seed level when they start their company. If they get acquired or if they get into an IPO, you can make 100x your initial capital. So this is one way of participating in the growth story of tech companies. The second thing is you can work in tech companies and get ESOPs allotted to yourself. If these companies do well and if they get a kid or if they go for an IPO, you can easily become a millionaire. So you have seen a lot of crorepati's who became rich when Zomato came up with an IPO and got listed. Similarly with Swiggy, Paytm, etc. So the third option is to purchase them as unlisted shares. So there are some places where you can purchase these unlisted shares that are available for sale. But you have to make sure that you do proper due diligence. And the last option is during the listing. So many companies have got listed in the last 3 to 4 years, like Policy Bazaar, Pop, Zomato, Paytm, etc. So either during IPO they get listed at extremely rich valuations, but you can wait and purchase them at poor, yeah, cheaper prices. So the valuation keeps going down if the results are very poor. If they have some poor bad quarters, you can basically purchase them at a very, very cheap price. So you can purchase in secondary markets as well. So here is one primary question that's been asked by all the investors, enthusiasts in India who are investing in stock market. So what is the problem? So one person has posted in Twitter saying loss-making companies better than a profit-making. So he's saying stock market ka Kalyug is this. So I'll wait and first want to see Zomato posting profits. Must first criteria to buy a stock. So profit growth is missing. So Zomato declares a loss of 350 crores, stock up 5%. Best part is they have never made a profit. So do you know their current PE? So short FD rates are at 3% and the game is passing the parcel. So it is really strange to see how the stock market behaves. Yes, loss making a company like Zomato gives 100% listing gains. So technology investors do not look for profits immediately. Amazon was loss making for ages. Did we bother? So these are the kinds of questions that are there in the minds of different investors. So let's answer this. So should you invest in a loss making company? You can post us a comment with your reply. Should you even consider these companies as investment when they are not making any money? So this is the primary question. So we'll talk about this in detail in the next video of the series by talking about US tech companies, how they are performing, are they profitable, are they loss making. So all these details will be shared in the next video. So if you like this video, if you want to continue watching our video, please subscribe, please hit the like button. Meet you soon in the next video. Bye.